Hey everybody, Glenn Kavanagh here of ApplyWithGlenn.com and New American Mortgage. Well, if you're coming to the site today and looking at this video, you're trying to get some information on USDA loans, so I will try to do a good job. And I've got a presentation we'll just run through here, and of course, if you got any questions at all, feel free to give me a call or shoot me an email when we're done, and I'll be glad to answer any questions that you have. So let's get started. Okay, so USDA loans, probably one of my favorite loans. I really enjoy it. It's great for first-time home buyers, but not necessarily for that, but I do a lot of these, and so really believe it's a really great program. So let's get into what we'll talk about today. So basically what we're going to talk about today is who is USDA? Who is that? What does this particular loan offer? Some of the qualification guidelines around that, around the buyer themselves and also the property, some of the terms of the loan so you kind of know what type of loan it is, and of course we'll go through a little bit of the loan process as well so you can kind of understand kind of how things work with it. But just to get started, who is USDA? Well, basically USDA stands for United States Department of Agriculture. I've done these loans for a long time, and I always joke with folks because they come in and they hear USDA and their mind immediately goes to going to the grocery store and picking out a nice piece of meat with the USDA seal on it, and they think they're getting a loan to buy a cow or buy some steak or something like that. And I also joke that the house must come with a cow or a steak, but that has nothing to do with that. Same organization. This is just a portion of this organization that actually does loans in rural areas. They're also known as rural development loans, and they're guaranteed by USDA against default for the lenders that service them. So just know when you get a loan with USDA, you're not actually going to make your payments to USDA. It's just a loan program that any lender can service. But if the loan were to go into default and that lender were to lose money on it, USDA guarantees the loan against loss, and there's some insurances that cover that, and we'll talk about that later. But just real quick, down here we got USDA's mission statement: to increase economic opportunity and improve the quality of life for all rural Americans. So what a great mission statement. So let's talk about the loan in general. So the 100% USDA loan obviously offers 100% financing for homes determined to be in a rural area, and we'll talk about that a little bit later on in the presentation. There is no down payment required. The base loan amount cannot exceed 100% of the appraised value, but it can include fees, and they can be rolled into the loan. And those fees are what we call guarantee fees, and we'll talk about those in a little bit as well. So it is possible to actually borrow up to 102% of the value of the house, because those guarantee fees up front can be up to 2%. We'll talk about that a little bit as well. Now, as far as property guidelines are concerned, again, the property must be located within what's considered the USDA footprint for your specific area. Of course, my area, and probably if you're looking at this, you are looking in Western North Carolina, Asheville area. Generally speaking, around the Asheville area, if the house is inside Asheville city limits, meaning it's got a zip code of 28801 through 28806, generally the house will not qualify because that's inside city limits. There is talk that the Hendersonville area, the Hendersonville city limits, is also going to be in a non-qualifying area. But other than that, pretty much all of Western North Carolina qualifies for USDA. It's about 95% true. There's a couple areas in Candler and in lower southern Asheville that don't particularly stay along the guidelines, but about 95% of the time, as long as you're not in Nashville with a Nashville zip code, you're going to be okay. But there is a way to check and see if the house you're looking at qualifies. So I'm going to show you how to do that real quick. The site looks like this. So what I'm going to do is I'm going to get out of this real quick and go to Safari here. The easiest way to get to the USDA website and get to the qualification area is just to go to the Google page and just type in USDA eligibility. And you can see I've already done it a million times, but when you put this in, the first thing that pops up is USDA income and property eligibility. So we click that. Then right here under property eligibility, you'll see single family housing. I'm going to click that. then click accept here. And then here you can put in any address in your area. So let's just say I'm going to type in an address here that I know qualifies. If you click go, no, it won't qualify, excuse me. As you can see, this is a 28805. It pinpoints the address for you and says that this is not located in an eligible area. Now, if it were in an eligible area, this little stick pin would be outside of this sort of yellow zone, and it would say that it qualifies. If you zoom out on this map, you can actually get an idea. This shaded area here is all the sort of non-qualifying area. So anywhere inside of this, if you're looking at a house, it will not qualify for the 100% financing with USDA. It's got to be out here somewhere. So there you go. So anyway, without having to worry about website addresses and all that, again, just head to Google and type in USDA eligibility. It's the easiest way to go about doing it. Okay, so let's get back into this. All right, so more things about the program. So this program is not limited to first-time homebuyers. A lot of people think that this is a first-time homebuyer program, but it is not. You could have owned a home before, no problem. You can't own multiple homes. This has to be your one and only home. I didn't put that in here in the presentation, but that's important. Home has to be your primary residence, okay? It cannot be a second home. It cannot be investment property. Of course, you know, the rule we just talked about with having no more than one property is going to kill that anyway, but just know that if you're looking for a second home or investment property and want to get 100% financing, it's not possible with this program, or with most programs either. Eligible property types, single family residences, approved condos, and I say approved condos because with condos anymore these days, they have to be approved by HUD, FHA, and if they're not, you have to go through that approval process. Condos are very difficult to do right now. But townhomes are okay. There's no approval process with that. And we can also do modular homes, and that includes on or off-frame modular homes. Okay. So as far as the borrower is concerned, you got to at least have a credit score of 640 to get in the door with the USDA program. And what we do, like most lenders, is pull all three of the major credit bureaus, Equifax, Experian, and TransUnion, take the middle of those three scores, and that score has to be 640 or better. USDA also has income guidelines. So basically what they're looking at is that you cannot make any more than $74,000 a year for the total household income to be able to qualify. They figure if you're making that much, I guess you don't really need 100% financing. But the important thing to remember here is if you're married and both you and your spouse work, that total income cannot be over $74,000. So it's not for each of you, it's for the combined household income. If you have other people living in a house that are of age and working, you have to combine their income in that as well. So just think about that. Remember, it's total household income. But if you're looking for a home just yourself, all you need to worry about is do you personally make less than $74,000? Anything over that, it will not qualify. Okay? Now let's talk a little bit about the loan. This is what I love about this loan. It's a 30-year term, so there's no funky loan programs. It's not an adjustable rate. There's no weird balloon or anything like that. And it's a fixed rate as well. And the great thing about the fixed rate is that this rate is usually lower than the regular conventional rates. At worst, it's the same. It usually is lower, which is awesome. So you're not getting any kind of a ding on rate because you're not putting any money down, which is great. Now, with all loan programs, with the exception of a VA loan, if you put down less than 20%, there's always going to be some version of private mortgage insurance. Now, USDA has that, and it's called a guarantee fee. We're going to talk about that in just a second. The good thing is their monthly premium that you have to pay on that is the lowest available in any program right now. So even though you'll have mortgage insurance, it'll be way less than if you were to do a conventional loan or an FHA loan or something similar to that. Great program. So let's talk about the guarantee fee. Again, these loans are guaranteed by the USDA, so they do have insurance on the loan to cover themselves if loans default, just like any other insurance. Unfortunately, it's insurance that you get to pay for and not USDA. But their version of this insurance is called a guarantee fee. Okay, so let's talk about that a little bit more. So they actually collect this, we'll just call it an insurance premium, because basically what it is, they collect it two different ways. First, they have an upfront guarantee fee premium. That's a one-time upfront fee that you pay, and then there's also an annual fee that you pay. Now, the annual fee, kind of like with your escrows with property taxes and things on your loan, they'll take the annual fee, divide it by 12, and then they add that in to your monthly payment each year for 12 payments. Now, the upfront guarantee fee right now is 2% of the purchase price of the home. Now, the good thing is they'll actually enable you to roll that into your loan, which is great. So you don't necessarily have to pay that out of pocket as a closing cost, but you can if you want to. So basically what this means is you're actually going to be borrowing 102% of the value if you roll that in, and that's okay with the USDA as long as it's the fee, the guarantee fee that you're rolling in. So now that guarantee fee is going to stick around until you get to a point where you've got 20% equity in the house, and then it'll go away. Now, the good thing about USDA's guarantee fee and their insurance, different from others as well, is that the fees actually looked at each year, and they actually take a percentage of your current balance. So as you pay your loan down, this annual fee actually goes down as well. So over time, your monthly premium is going to go down and eventually go away if you're not at 20% by the time that it does, which is great. Again, no other loan program does that. You start with a fee and it stays the same until you get rid of it. So it's another benefit of the USDA program. So that's basically it for the program. So just real quick on the process, and this process is not going to differ from really any other programs with the exception of the tail end. But I always say, first thing, always get pre-qualified. Come talk to me and put in an online application and whatever we need to do to kind of get an idea what you're going to qualify for. I'll get a pre-approval letter, get that to you and your realtor, and that way they can get out there and start looking for homes that they know you're going to qualify for. There'll be some documentation that you'll need to gather to prove all the information that you gave me on your application, like W-2s and tax returns, that sort of thing. And of course, while you're looking and you find a house, make sure you check on the USDA website like we did before, make sure that that house is going to qualify for USDA. And one other thing you want to make sure of too, and especially something to talk to your realtor about, USDA is really picky about the house. They really want the house to be move-in ready. They don't want there to be any kind of major repairs needed. They don't want to see any kind of safety issues. So it's important that the house you're looking at is in good shape and doesn't need a lot of repairs. If so, there may be some repairs that need to be done before you actually close. That's an important thing to think about, so make sure you talk about that with your realtor as well. Once you find a house and get a contract on it, I'll need to get a copy of that. And once I have a contract in place on you, we'll be able to get your rate locked in and get your appraisal ordered and sort of move through to absolute final approval. Now, the big difference with USDA, different than other programs, is once we actually have given you final approval and we have everything for your file, we actually have to send the file in to USDA for them to take one final look at it. They, I guess, either don't trust lenders or, or something, I don't know, but they make us send that off. And depending on how busy they are, will determine how long it takes for them to get that back to us. In the past, it's been 1 or 2 days, up to 2 or 3 weeks. And it could be even longer than that because we hear of stories of where it's actually longer in different states for this program. But for us, the longest we've seen is about 2 weeks, maybe 3. So it's always important that you want to build in additional time on your contract if you're doing a USDA loan, just to put a buffer in there for any kind of slowdowns that they may have at USDA. But anyway, guys, that's basically about it. You, of course, if you've got any questions, you give me a call. I'm glad to help you. I'm going to be throwing up my contact information here for you. But thanks for taking a listen. And if you got any questions about any other loan programs, I'll be putting some more videos up there. And if they are up there already, go ahead and take a look. Thanks and have a great day.